Nobody today that's investing really has been through a period like what we're about to go through now. So I believe we're going into a recession. Now this is all just my belief. Nothing that I'm saying is really... Nothing that I'm implying is going to be factual, let's say. It's all what I believe. I want to get that out of the way right now, and I'm not a financial beaver. I'm just a random beaver on the internet. With a nice little frog pendant here, but... I believe we're going to be going into a recession, or in a recession right now. And that's a big part of why I sold all my growth stocks last year. Yeah, it had nothing to do with Russia or Ukraine or any of that. I didn't really foresee any of that, like most people. And I don't blame inflation on that at all. What I think it is the government spent a bunch of money, they paid people to do nothing, now we have more money and less goods. That just is common sense to me. Now, one thing that I do find a bit scary, though, is all the politicians and everything, they're blaming everything but government spending. Inflation's this fault, that fault, anything but what I spent. All the money we created. Just doesn't make sense to me. To me, that's just an obvious one. They go hand in hand. Government spending and inflation. That is why I sold, and we're going into a recovery period. So that's when inflation kicks in. I've mentioned it many times on my channel. That's the whole point of this stuff. The gold. But yeah, I'm not going to talk too much about gold today, although it is great when inflation is going crazy. That's kind of why I bought it. But in the markets, everyone's used to, they invest their money and everything just goes up. In 2020, you invest your money, 3 months later you double it. If you invested at the bottom at least. Crazy. So, with that being said, you look at 2008, things went down short term and then everything went up. For like a decade, everything went up. And then you go back before that, 2000s, there's a crash and then everything went up. That's just what people are used to. And why did it all go up? Because there was no inflation to worry about. Therefore, the central banks, or I'll just say the Federal Reserve because most of my audience is American, but the Federal Reserve will print money, they'll put it through the treasury, it'll find its way into the economy, and then that will help stimulate growth again. But when you're worried about inflation, you can't just start printing all this money and throwing it out there. That's what causes inflation. So without any central bank to help really stimulate the economy, they're actually going to be making it harder because they're going to have probably contraction. They're going to go past neutral, in my opinion, but there's nothing that they could do to help stimulate the economy again. The economy needs to do it on its own. The economy hasn't had to do that for such a long time. And when there's no central bank to help out, you get things like the Great Depression. And keep in mind, even in the Great Depression, most people were still working, most people were still employed. You gotta look at it from a positive point of view always. Like where I'm working right now, 60 guys got laid off. That's crazy. I'm still working there though. It's not many left, but I made it through and I'm really proud and happy about that. Just to be able to keep my job for a bit longer. But Yeah, I like my job. I don't want to go, especially right now. It's not going to be a fun time being unemployed again and then try to find work when it's going to be a lot harder than before because there's nothing to stimulate the economy and print money and get more money in people's hands because they're all going to be fighting inflation. So, with that being said, it's a different investing environment than what people are really used to. What's been happening for like the past 20 years isn't normal. So, unless you've been investing for really longer than that, you actually have to be investing for 40, 50 years in order to really understand what those times could be like when there's high inflation, not really a good way for the central bank to just bail people out. And in order to learn those lessons, it's going to be a long time that you had to be investing. That's not most people today. That's just not most people. That's where financial education comes in. If you could understand the market equations as they're happening, you don't really need to experience it as much. Experience is a big game changer, and you're not gonna do as well without the experience, but you have to be able to understand what companies can hold up throughout those times. Not everything just falls off a cliff. Some companies grow and even thrive in those environments. You just gotta find them. There's a lot of money to be made. Now might not be the best time to be an index investor, in my personal opinion, and I'm not a financial beaver. But I'm doing pretty good this year as a stock picker who only touches value. I'm really pretty happy with how this year is going. I'm on pace to beat my goal and everything. But I also hedge all my bets. I'll make money if I'm right, I'll make money if I'm wrong. But when I'm right in everything, like 2020, I didn't make as much as everyone else. Because I'm hedging all my bets, I'm not just betting on one direction. This year, I'm not hurting as much as everyone else, that's for sure. So, you give a little, you could get a lot. That's kind of the way I see it. Just be patient. As Warren Buffett said, the marketplace is a great place for the impatient to move money to the patient. Be patient, find your deals. I'm buying value, that's just what I'm doing. None of this is meant to be advice, but it's just what I see happening. And that's about it. I'll love to know your opinion on what's happening. Please join the Beaver Dam fam, like and subscribe with all notifications on. Stay positive. See you next time. Thanks. Bye.